What we're going to talk about today is gold in general, but possibly other metals that are going to be part of this, maybe even crypto. I believe silver is definitely going to be a part of this. But we're going to talk a lot about gold. Now, gold just hit an all-time high above right now on JM Bullion is $4,690.53. That's an ounce. If you're new to stacking, whether it be gold or silver, this is the show that you want to listen to, because I believe what Trump is doing with the dollar, the $100 bill at first, and then the rest of the U.S. currency is going to follow with his name on it. Some people are not happy with it, but I think he's telling the Fed to go F off. Let me know what you think in the comment section. But now everyone's watching the price surge against the backdrop of the U.S. debt crisis, and Treasury Secretary Bessent talking about monetizing the balance sheet. This is incredible because it goes along with my thinking. And most people think they understand what happens or what's happening with gold right now. But what nobody realizes is there's another gold number, one that has been hidden in plain sight, a number that could completely reshape the U.S. debt crisis. Some people think it's just a way to pay off some debt. I think it's deeper than that. I think by revaluing gold to the price of the way it should be. How about that? Same thing with silver. Silver will follow. So won't most of the commodities. Now, one that's been hiding in plain sight, a number that could completely reshape the U.S. debt crisis. What's that number? It's $5 trillion, or 70% of the $42 they're all related to. Let me explain. $42. That's what the United States government officially valued gold at. $42 an ounce. Not $4,400, not the $4,690.53 that it is right this second. Now, anywhere close to the market price would be nice, but $42, this is the actual official valuation of American gold reserves frozen in time since 1971, when Nixon ended the gold standard. Think about that for a second. The U.S. Treasury holds roughly 8,100 metric tons of gold. Now, this is what we're told, right? What is the reality? Is the gold even there? Now, about 260 million ounces. That's the 8,100 metric tons of gold. At today's market price of around the $4,690, that gold is worth well over $1 trillion. But on the government books, it's only 11 billion. And here's where it gets interesting. Treasury Secretary Scott Bessent has been openly talking about monetizing the asset side of the balance sheet. Most people hear that and think he's talking about selling some buildings or federal lands. But what institutions understand that retail investors, well, there is much bigger asset sitting right there, American gold. And there's a legal mechanism already in place to unlock its value without selling a single ounce. But here's the part almost nobody sees. If the U.S. were to revalue gold, that's per ounce, say $15,000 to $20,000 an ounce, the math changes everything. That 260 million ounces suddenly becomes worth trillions of dollars. Not from mining more gold, not from buying more gold, just from adjusting a number that has been artificially frozen for over 50 years. And that five-ish trillion dollars, that's the exact amount that would take the US debt from its current crisis level of 120% of the GDP down to roughly 70% of GDP, which is historically where debt becomes sustainable again. So you've got the $42 official price and the $5 trillion unlocked and the 70% debt to GDP target. Three numbers that aren't random at all. They're connected by a plan that might already be in motion. So let's break it down exactly how this would work and why it's not just possible, but potentially inevitable. There are two forces converging right now that make a gold revaluation not just logical, but necessary. Force number one, the legal mechanism nobody knows exists. Except for me, and now you. Well, I did the research, and that's why you're going to know too. Here's what most people missed about the entire scenario. The government doesn't need congressional approval to do this. They don't need a financial crisis to justify it. The authority already exists, buried in a document called the Federal Reserve Financial Accounting Manual for Federal Reserve Banks. In Section 2.10, Gold Certificate Account. And here's the exact language. The Secretary of Treasury is authorized to issue gold certificates to the reserve banks to monetize gold held by the United States Department of Treasury. Let me clear that up a little bit. The Treasury can print pieces of paper called gold certificates that represent a claim on America's gold. The Federal Reserve can then buy those certificates and deposit cash directly into the Treasury account. It's not a loan. It's not new debt. It's a balance sheet swap. But here's the reality of it all. Those gold certificates can be issued at whatever price the Treasury decides to value gold. Not the ridiculous $42, especially when market value is much higher, not market price. Whatever number accomplishes the policy goal. If they need $5 trillion to stabilize the debt ratio, they simply issue certificates valuing gold at, say, $20,000 per ounce. The Fed buys them. The Treasury gets $5 trillion in cash, or so to speak. And technically, both sides of the equation balance. Now, you might be thinking, this sounds like a financial conspiracy theory. But here's where it all starts to click. This isn't theory. This is currently operational procedure. The Fed's accounting manual lists gold certificates as the very first item on their balance sheet examples, not treasuries, not mortgage-backed securities, gold certificates. They're treating this mechanism as something that's ready to deploy. And here's what people aren't connecting. The last time the U.S. did something like this was 1934, when Roosevelt revalued gold from $2,067 to $35 an ounce. That single accounting move increased the value of the U.S. gold reserves by about 70%, providing liquidity to fund New Deal programs and stabilize the bank system. Same playbook, same century, much bigger numbers. But understanding the mechanism is only half the story. The real question is, why would they do this now? Force number two, the debt spiraling that can't be hidden anymore. Here's what Wall Street knows most people don't. The U.S. debt situation isn't a problem that can be fixed with spending cuts, tax increases anymore. The numbers are too big. The interest payments are too high. And the political will doesn't exist. Right now, U.S. debt sits at more than $38 trillion. The debt to GDP ratio is around 120%. That's worse than where we were at the end of World War II. But back then, we had a young workforce, a growing economy, and a global demand for our manufacturing. Today, we have an aging population, slowing growth, countries actively trying to move away from the dollar dependence. And here's the part almost nobody talks about. With rates evaluated, the US government is now paying over $1 trillion annually just in interest payments. Now, that's more than we spend on defense, more than Medicare, and it's growing. Traditional solutions won't work. You can't tax your way out of when debt is 120% of GDP. It's just crazy. 120% of the United States GDP. You can't grow your way out of when productivity is stagnant. And you can't inflate your way out without destroying the dollar reserve's currency status. This is where the gold reevaluation becomes the only move left on the board. If you revalue gold to $20,000 and unlock that $5 trillion, you immediately pay down debt from 37 trillion, 38 trillion to 32 trillion. Now that drops your debt from the 120% GDP back to around 70%. That's the sustainable zone where countries can manage their debt loads without market losing confidence. Our markets have lost their confidence in the United States a long time ago. Back in the beginning of 2008, the BRICS nation was designed and it was set off. Now these are countries that hold the world more than 50% of the world's GDP. We're in a lot of trouble. The United States has the world currency. Well, at least that's what they say. I don't think that's any longer. Now, there's a thing about this move. It's not free money. When you inject $5 trillion in new purchasing power into the economy, you create inflation. Real, painful, wealth-destroying inflation. The gold bugs who own physical metals would become incredibly wealthy overnight. And I hope you own some gold and silver yourself. Anyone holding dollars would see their purchasing power collapse. It's already there. If you look at I believe it's on the Treasury website, it shows a graph. It makes it very simple to see. What the actual purchasing power right now is 3.7%, or 3.7 cents out of a dollar. I'm not making this up. You can look it up yourself. Now, this creates what macro analysts call a doom loop. You revalue gold, inflation spikes, interest rates surge. The Fed has to stop in and suppress those rates through yield curve control, which means printing even more money to buy treasuries. Now that creates more inflation, which requires more intervention, and the cycle accelerates until you're in a full currency crisis. The government knows this. But when you're choosing between an immediate debt spiral or a delayed inflationary crisis, government always chose the delayed option. Always, because it buys time. And time means staying in power. Quick pause. If you're looking for stock picks, Seeking Alpha has outperformed the S&P 500 by almost 8% over the last 12 months. And you buy over 60% since 2022. Is that a good stock? Maybe. Now, gold is climbing to record highs organically. Percent is floating trial balloons about monetizing assets. The narrative is being prepared. Central banks have been accumulating gold at record rates for 18 months now. They're positioning for something crazy. And I do believe I know what that is. Phase 2 is reevaluation itself. Now, this could happen suddenly with an executive order or slowly through administrative policy shift. I don't think we have time. Either way, the mechanism gets triggered. Gold certificates get issued. The federal balance sheet expands by $5 trillion plus overnight. Treasury uses that cash to pay down debt. I don't think that's going to happen. Markets initially celebrate because debt to GDP drops to a sustainable level. Phase 3 is the aftermath. This is where the inflation hits, where the dollar holders realize their purchasing power is evaporating, where interest rates want to spike, but the Fed has to intervene with yield curve control, where the doom loop becomes reality. This phase could last years and would fundamentally reshape the global monetary system. We're in a phase 1 right now. The question isn't whether this mechanism exists. It does. The question is whether the government decides the short-term policy benefit of solving the debt crisis outweighs a long-term economic consequences. And with midterms only a few months away, I don't think there's much choice at all. And I think Trump has to do something. Now, here's what to watch. If gold breaks above $5,300 or so and holds, institutions are positioning. If percent starts using phases like optimizing the balance sheet and revaluing strategic assets, the groundwork is being laid. And if the Fed suddenly talks about gold certificates in policy statements, phase 2 is imminent. The mechanism is already built. The authority already exists. The only question is timing. When the government owns the gold, they control the price. And none of this is personal financial advice. It's education. It's my belief. So you can build your own plan. If you found this valuable, hit subscribe. What I'd like to bring up and finish this with, you have gold. They have the ability to produce a gold standard currency. Now, this could shape everything. And that's why I believe the gold standard currency is really the way they're going to go. You already have Donald Trump telling us his name is going to be on the $100 bill. We already talked about what I think about that. I think he's telling the Federal Reserve to, what do you think? I really would like to know. Do you think it's going to be a gold-backed standard? Do you think this economy can change very rapidly? And before the midterms, I'm thinking things are going to be happening between now and July 4th, 2026, to the point where we're going to know exactly what's going on in a very short period of time. Again, leave a comment for me. I would love to leave a comment for you. And if you do subscribe, I would really appreciate it. I'm just trying to build a show, and your help is needed. God bless. Have a great rest of your day.